And we do welcome you to Power Lunch for a Fed Day. I'm Bill Griffith.
And I'm Sue Herrera. Welcome from me, too.
Some of the things we're working on today, as you just heard from Michelle and Becky, of course, Dow, pretty good rally mode right now. Most of the stock market is, as the price of energy continues to drop on some inventory data out today, and as we wait for the announcement about the Fed's decision on interest rates, which will probably come around 2:15 Eastern time today.
And another reason we're watching the oil market is some comments that have been going on just as we've been monitoring the situation at the United Nations all this week. Venezuela's President Hugo Chavez making his address just a short while ago with some very strong words about President Bush. He called the president the devil. Now, it hasn't moved the oil market yet, but of course, as we've been discussing here ongoing at Power Lunch, Mr. Chavez has been cozying up to various other oil producers, and the oil market is very sensitive to what he does and what he says.
Get to more of that in just a few moments. Also, later this hour, as Yahoo warns that earnings won't be quite up to snuff because of a decline in ad spending online. We thought that was where the money was going. Where is the money going for advertising these days? We'll look at that coming up a little bit later this hour here. Some surprising answers on that. First, to the markets. As we said, rally mode for stocks. Energy's another story, though. Oil today has been in the $60 range. It's at $60.95. That's down 71 cents, more than 1% as the meltdown continues. Same thing for unleaded gasoline, down 1.25% right now at $1.48.5. And natural gas today is even lower, down 1.2%. Although it was much lower than that earlier, now at $4.94. The Dow up 63 points, had about a 75 point gain for a time. We're at 11,603. Let's all recall 11,722 is the all-time high on the Dow, set back in January of 2000. The NASDAQ is up 30 points today, a gain of 1.3% at 2252. And the S&P at this hour is up 0.5% or about 7 points at 1325. Let's get more on this slide in oil today and elsewhere. Sharon Epperson has the story at the New York Mercantile Exchange. Sharon?
Well, Bill, we are lower here with oil prices. We're actually lower across the board in the energy complex. And you mentioned the comments coming out of the UN today from Venezuelan President Hugo Chavez. Well, the traders here aren't really paying much attention to that, but the wording was quite strong, calling President Bush the devil, saying that the devil came here yesterday and came here talking as if he were owner of the world. Traders telling me, hey, you expect to hear this kind of rhetoric from Chavez, but the speech does come just after Iran and Venezuela have signed this oil deal with Iran providing experts on oil and gas to Venezuela. Again, not really bullish for the market or supporting prices here. We do see prices sliding here below $61 a barrel on the October contract, which expires today. We're seeing November trading under 62. Traders here say, you know, they're expecting prices to continue to slide. The market feels very heavy is the wording that they're telling me, perhaps sliding to the mid-50s, and especially as OPEC says, as it did yesterday, that it will not cut production to keep oil prices from falling. They are going to be paying attention to the Fed today and hear what they have to say about the economy. But really what took prices lower today across the complex were those weekly inventory numbers that showed distillate supplies falling in particular. I mean, distillate supplies rising actually triple the amount that was expected, up 4.1 million barrels, and that, of course, sent heating oil as well as crude to the lowest level that we've seen in about 6 months, Bill.
Sharon, thank you very much. I'm joined by Michelle Carusa Cabrera. Back when you and I were doing Power Lunch together, you went to Latin America. You interviewed Chavez. I mean, you watched the spectacle of this man and how he is viewed down there and how he carries himself.
And I think what's interesting, when you see the lack of reaction so far in the oil markets, I think it's because anybody who knows Hugo Chavez knows that he says these kind of things all the time. The only thing that's different about today is, boy, he's got one tremendous platform for these very vitriolic statements that he made about President Bush. He called President Bush the devil.
We have more live team coverage. We got more to cover right now to the markets. Before we get back to Sue, Scott Wapner will be checking in from the NASDAQ in just a moment. Rick Santelli's got his hands full at the Merc in Chicago today ahead of the Fed announcement. Let's start, though, with Bob Pisani, the New York Stock Exchange. Nice little rally, Bob.
Indeed, Bill. I'll tell you something. We have held up extremely extremely well here today. You might think the markets are a bit on the overbought side, but Wall Street is still buying. Let's take a look at the markets today and see what's going on. The key metric today, the key event, has been the S&P 500 hitting new 5-year highs. Now, we are just at these 5-year highs at about 1325 on the S&P 500. We need to close over that to get an actual closing high, which is what really matters. But we are there right now. Let's just leave it there for the moment. What's been moving it? Strong earnings again today from a number of key companies. We are continuing to see declines. The 10-year is at 4.7% in the yield and declining oil once again. That's important here. Here's the earnings. Morgan Stanley makes it 4 in a row now after, of course, Lehman, Goldman Sachs, and Bear Stearns. They beat the earnings by a wide margin. Circuit City came out. Their earnings beat expectations. Strong sales of flat panel TVs and laptop computers. CarMax hitting an historic high. Used car sales for them were particularly strong. They beat the estimates. Not only that, they guided for the full year. And as I said, that is a historic high for CarMax. Now, the trade this month has been a very simple one. Sell energy and sell energy stocks. So if you look at the S&P Energy Index, this is 1 month chart you're looking at, down about 8% on the month. This is all the big energy stocks, including exploration and production, oil service, and the big energy stocks like ExxonMobil. The other trade has been, other than to sell energy and energy stocks, is buy technology stocks. So once again, the S&P Technology Index, which is IBM and all the big stocks that you know in the tech group, are all up again today. See that? That's a 1 month chart, up about 5%. Very simple, and that trade again has been working today. One thing that's a little bit odd here, the Federal Reserve and their meeting today is not a factor. Nobody on Wall Street, and I mean nobody, is talking about this as if there is any meaning. That means very, very high complacency levels. So any kind of comments from the Fed, for example, unusually hawkish events, are not really factored into the market right now. Bear that in mind. We may get a tad of a surprise here from the markets if they're hawkish. Let's go over to Scott Wapner standing by over at the NASDAQ. Scott?
All right, Bob, thanks. And one technology issue investors are buying today, right here, Oracle. The shares up 12%. We're off the highs here for the NASDAQ, up 30 points, but Oracle has been about this level for the most part of the trading day, up about $2. By now, you know the news. These very, very strong earnings. Profits up 29%, revenues up 30% from some lucrative contracts with Walmart and some other retailers. And CEO Larry Ellison crowing a little bit. He says that Oracle has leapfrogged rival SAP in numerous market segments. And Citigroup, well, they're a believer in this stock. They have upped it to a buy from a hold. They have also raised the price target. Now, just as we saw Yahoo yesterday drag internet stocks lower, we are seeing Oracle today bring software stocks higher to names like VeriSign and BEA Systems, Red Hat, and Akamai, and Adobe, all trading to the upside. A lot of green on that board. You see BEA and Red Hat, the big winners there. Another winner is Microsoft, another software issue, obviously. But Microsoft is going to launch a new HD DVD player for its Xbox 360 in Japan. That's to match what Sony is doing with its new PlayStation 3. Let me go to Sirius as well, because it's up 3%. Both Sirius and Howard Stern shooting down those rumors that Stern is, was perhaps mulling a return to terrestrial radio in some form or fashion. They say not true, and then that stock getting a nice rebound today as well. And finally, let me just end on Palm, because the numbers are out tomorrow. Bob O'Brien talked a lot about it earlier today, this rumor, nothing more than a rumor, that Palm could be a potential takeover target. So it's certainly affecting the shares there. Let me send it to Chicago now, and Rick Santelli. Hey, Rick.
Hi, Scott, and thank you. You know, interest rates, well, they couldn't be better behaved going into today's meeting this afternoon. Just look at an intraday 10-year note yield chart, and particularly notice that we've been in a great little range of late in the last hour or so between a 471 and a 472 yield, which is particularly interesting because 472 was the close to 6-month low yield prior to this morning. Now, the last meeting was August 8th. We all know there was no Fed tightening. Here's the way the 10-year looks in that interim period on a 2-month chart. It's pretty much been all sailing lower in rates, and the one little uptick in yields was indeed that psychological level of 5%, which even in and of itself was 25 basis points under the current Fed funds rate. Now we're well over 50. The dollar index over the same 2-month period, well, even with the slight ding the dollar index is taking today, maybe just a reversal from yesterday's slight flight to quality based on Thailand's coup, we do see that we're still hovering in a pretty competitive range, at least based on the last Fed meeting. And Bob Pisani said a mouthful. Many are looking for the statement to reaffirm the reasons of not tightening in August. That is, moderating economy and inflationary issues subsiding. But if there is something hawkish, they don't think it'll be inflation. It may be housing. Maybe what better time to air that hawkish feeling than on a day where everything seems to be going rather well. Sue, back to you.
Thank you very much, Rick. Applications for U.S. home mortgages